Welcome to Finscale, a podcast created by Solen Niederkorn, shedding light on innovation in finance, banking, and insurance.
Navigating KYC Challenges with Fourthline Insights. Krik Gunning, CEO and co-founder of Fourthline.
The typical approach we've seen there is that banks blame the regulator and say, yeah, the regulator forces me to ask you this information. I also realize it's painful. I also realize this is time consuming, but we'll just have to get through this process, which I think is a very negative way of approaching the topic. And I think if you zoom out and take a step back, this is not just about preventing criminals from getting access to the financial system. This is also about empowering you as an individual to protect your privacy and to protect your account and to protect your savings. I would hope that more financial institutions realize that a remediation process is actually an opportunity to do exactly that. So to tell a client, listen, we're now going to give you the tools to prevent your account from being accessed by criminals, from your savings being robbed. And we're going to allow you to go through a process once and reuse that information to protect your account and your savings going forward. I think that's really a missed opportunity because it can actually be a really positive thing.
Starting out in the financial sector brings many surprises, and often the greatest comes during audits and regulatory visits. The challenge of squaring away the central client file, a seemingly routine task, can throw even the most established financial institutions into disarray. This vital KYC remediation process, filled with complexities and operational challenges, is often overlooked. Institutions grapple with inconsistencies in customer data across different systems, and not to mention the looming concern of inadvertently facilitating financial crimes. Data privacy, security challenge, and the risk of not conducting proper KYC remediation are pressing matters. Krik provides valuable insights into navigating these intricacies, emphasizing the importance of understanding and adapting to an evolving regulatory landscape to maintain compliance. He also shares advice on how organizations can sustain customer relationships during the KYC process and offers a strategy to mitigate any negative impact. Delving deeper into Fourthline's offering, we explore how they assist clients from onboarding to maintaining long-term customer relationships, showcasing solutions they provide, with Conto as a case in point. The conversation also touched on the need for country-specific adaptations for optimal performance and the innovative approach of qualified signatures provided by the European firm based in the Netherlands. Enjoy the show! Hello everyone, hi Krik.
Very nice to be here. Thank you so much.
Yeah, I'm very happy to have you on my podcast and to deal with the complexity of onboarding remediation of client files. Can you please introduce yourself and explain to us how you went from ABN AMRO to building your proper venture in the KYC area?
Absolutely. So my name is Krik Gunning. I'm the co-founder and chief executive at Fourthline. Bit of international background. So I was born in the US, then moved to England, then to Belgium, where in kindergarten I could actually speak French. Unfortunately, that's no longer the case. I spent the majority of my childhood in the Netherlands, lived also in Spain and in Lebanon. And to your point, I started my career in banking, doing M&A advisory at ABN AMRO Bank. Then after 5 years I left, I co-founded an advisory boutique. It was partially doing M&A and partially advising startups that were looking to raise capital. I ended up joining one of the startups that I advised. So I took a bit of an educated guess, a company called SafeNet. With SafeNet, we built and launched a B2B deposit platform for which we need to be regulated and for which we needed strong functionality around KYC, as it involved opening multiple accounts at different banks. And back then in 2015, 2016, we evaluated tech solutions that were in the market, and in the end concluded that we didn't think any of them were solving the problem that we faced as a financial institution. So we decided to build something ourselves, basically taking the view that we wanted to control all of the technology rather than implementing 5 or 6 different point solutions. And once we had that up and running, couple of other fintechs approached us asking whether they could use that platform as a standalone product, which we launched in January 2018. And that started growing so rapidly that over the course of 2019, we decided to split the two companies and rebrand the KYC platform to Fourthline, where I'm now leading a team of just under 300 people with 50 different nationalities.
Perfect. And you're based in the Netherlands?
Yeah, the headquarters is in Amsterdam, the Netherlands. We also have a tech and operations hub in Barcelona in Spain, and we have salespeople in London, Paris, and Madrid.
Perfect. So as I said to you, I already did some episodes, and particularly in the French channel, on the onboarding. I've been facing what I was in banking remediation exercise, and I find it interesting to dive into this very specific exercise that usually is done perfectly by financial institutions, but requires a complex operational processes. In your sense, what are the most significant complexities involved in these KYC remediation processes?
It's a great question, and so just making sure that everyone understand what it entails. What we've seen happening across Europe with different regulators is we have very strict laws and regulations to prevent money laundering. Regulators initially focused a lot on making sure that financial institutions perform adequate client due diligence checks when onboarding new clients. But in recent years, we've seen a shift of attention also to checking whether financial institutions have adequate files on clients that they onboarded in the past. And that has led to huge fines in a number of jurisdictions, including the UK, the Netherlands, and the Nordics. So basically what happens is the regulator comes in, performs a review, and then informs the financial institution that they don't believe the information on existing clients is good enough. And the bank then is given the opportunity to remediate that. The challenge with that process, I think, is threefold. So the first is a regulator tends to impose a deadline. So they will say by date X, you need to have remediated this. If not, you need to offboard clients, which means there's huge time pressure. The second challenge is that for a lot of the traditional financial institutions, the data is scattered across the organization. Mm-hmm. So I opened my first bank account by physically walking into a bank branch, showing my passport, getting a cup of coffee in a bank account. So somewhere within that bank, there is a black and white photocopy of my passport, but who knows where. I think the third challenge that we typically see with traditional financial institutions is many of them went through M&A processes, which means they are facing a very complex IT system where the bank is built in different eras using different tech systems. I think those are the three biggest challenges.
Interesting to what you said is that there is a complexity also due to the fact that those companies are based in different countries, and most of the time the customer data is not harmonized. In your opinion, how can inconsistencies in this specific customer data can make the process even more complex and affect the process when it starts?
Yes, I think that the challenge is oftentimes financial institutions actually don't know what they know about their clients. And that's the result of the two things I just mentioned, which means the way they're set up, both from a legal and organizational perspective, as well as from a tech perspective, means that they often face the challenge of siloed data. So data is somewhere in the organization, but it's scattered. It's scattered in different entities, in different tech systems, and therefore it's really, really difficult to know what data you already have on the clients, and more importantly, because that's the key focus of the regulator, to actually be able to show the regulator an audit trail of the checks you've performed in the past. And just to make this tangible and explain to the audience why this is such a big topic, if we look at the example of my former employer, ABN AMRO in the Netherlands, they got a huge fine a couple of years ago. There were a number of shortcomings in their AML checks, but one striking one was when, during the great financial crisis, the Dutch government nationalized ABN AMRO as well as the Dutch part of Fortis Bank. They merged these two entities. And in that merger, 5 million retail clients were assigned a low risk rating. Now, objectively speaking, that was correct. So these were low risk clients. They've been in the books forever. But when the regulator came in, so the Dutch Central Bank, and asked ABN AMRO for proof how they came to that risk rating, there was insufficient proof. So I think a very important message here is it's not just about whether you've performed the right checks in the past. It's also very important whether you can show the evidence and the audit trail thereof.
Mm-hmm. So there is one element that I've been facing when I had to, unfortunately, suffer this exercise in my past career, is a subject linked with data privacy and security during these KYC remediation processes, because most of the time entities are not expecting so many feedback from the regulators. Generally speaking, compliance teams are expecting some comments, but most of the time there is a sort of surprise. And you say, and you confirm that most of the time also the regulators give a deadline. So it makes that people work a lot under pressure. And there is a risk, in my opinion, related to data privacy and security during the exercise. So what are the, in your opinion, the common pitfalls organization fall into during this effort, KYC remediation effort?
Yeah, I think probably the biggest pitfall is that financial institutions have a knee-jerk reaction when the regulator imposes a deadline and sometimes also an impending fine. The knee-jerk reaction tends to consist of calling a big advisory or accounting firm, engaging them to resolve this, and for lack of a better word, throw bodies at the problem. So hire thousands and thousands and thousands of people to try and manually remediate this process. And I think the challenge with that approach is it's very, very costly. It's very, very time consuming, but it's also, to your point, very prone to error. And that is just the nature of when you start handling very sensitive information, because let's not forget, this is about handling the most sensitive personal information. It's your biometric information, it's your government ID, it's your address, it's your financial information. I think in many ways it's very hard to contain that properly unless you embrace technology in that process.
Mm-mm. It's true. Important question, and we've not dealt with this. It's a bit shocking as a client when you receive not appropriate requests from your financial institutions. And just from your experience during the processes, what are the must-dos when it comes to client relationship to avoid a reputational problem or to avoid a problem of misperception from the client and to reduce as much as possible the consequences, avoid a loss of confidence from your clients?
No, I think it's a really good question. And I think this is where there's a little bit friction between what society at large expects, what a regulator expects, and what an individual client expects. Just by and large, as society, we don't want crime to pay off. So we want to have very strict rules and regulations in place to avoid criminals being able from laundering their illegal proceeds. So as society, we believe it's a good thing to prevent money laundering. The regulator is then in each jurisdiction in charge to make sure that the regulated financial institutions actually comply with the laws and regulations. But then something funny happens, which is the end client, even though as society they have a certain view on anti-money laundering, the moment it costs them time and money is when they get frustrated. And I think the best way to think about circumventing that and safeguarding your reputation as a financial institution is first and foremost making sure that you only ask for information once. So I think the biggest pitfall is, and the biggest frustration emerges when a client feels they need to provide the same information over and over again. And this very commonly happens, getting back to the point around silo data. If you are a retail client at a bank, but you also have an SME account, then in general, banks tend to treat you as two clients. So then you have, as an end customer, have the feeling that you need to provide the same information twice. So I think that's one pitfall. And the only way to avoid it is getting back to what I said before about the silo data, making sure that you actually know the information you have within the organization. I think the second big pitfall, and this is more an educational topic, is explaining to clients why you're asking for that information. And I think the typical approach we've seen there is that banks blame the regulator and say, yeah, the regulator forces me to ask you this information. I also realize it's painful. I also realize this is time consuming, but we'll just have to get through this process, which I think is a very negative way of approaching the topic. And I think if you zoom out and take a step back, this is not just about preventing criminals from getting access to the financial system. This is also about empowering you as an individual to protect your privacy and to protect your account and to protect your savings. And I would hope that more financial institutions realize that a remediation process is actually an opportunity to do exactly that. So to tell a client, listen, we're now going to give you the tools to prevent your account from being accessed by criminals, from your savings being robbed. And we're going to allow you to go through a process once and reuse that information to protect your account and your savings going forward. I think that's really a missed opportunity because it can actually be a really positive thing.
Yeah. And one last question about this remediation problem. You know, and we all know, everyone who listens to us knows that there is a new directive every 2 years or 3 years. We are now with the MLD5. And considering that the regulatory landscape constantly evolves, what would be your recommendation to ensure that organization meets continuously regulatory requirements when it comes to AML and KYC in general?
Yeah, I think the simplest way of explaining it is we, back in the days, thought that KYC was a snapshot. So this is you on a specific day. I retrieve information. That's it. I file it. I'll never look at it again, which is the example I gave when I opened my first bank account. I think what financial institutions need to realize is that in the fight against financial crime, and if you look at the expectations of regulators in society, it's no longer about a snapshot, it's about a movie. And it's about making sure that I don't just know that you meet the regulatory requirements at the day you open your account, but that you continue to do so on a daily basis. And I think a striking example is the consequences of the war in Ukraine, where sanctions can change overnight. So a client that was acceptable and within the risk appetite and within the regulatory requirements at the day of onboarding, overnight was outside of the risk appetite of a financial institution. So by definition, regulations will evolve. By definition, sanctions will change. By definition, the behavior of individual clients will change. And that means you need to be set up to move from this snapshot KYC to really continuous KYC.
Great. So what did you build at Fourthline? Great transition.
Now, getting back and explaining sort of why we ultimately decided to build something in-house. And I think it touches upon a couple of the challenges that we've already discussed. But I think in general, in the current market environment, the challenges are threefold. So one is you need to make sure that you comply with the regulatory requirements. And we've touched upon that from an anti-money laundering perspective, but you also very briefly mentioned the privacy aspect, and that's equally as important, if not more important. So within Europe, we've got GDPR, which a lot of people are familiar with, but we now see a trend in the US market where there's no federal privacy law, but states are adopting on a state level privacy laws that are very similar to GDPR. And making sure that you adhere to those laws and regulations is your license to operate. So not doing that means you don't have a business. The second point is, even though I opened my first bank account by walking into a bank branch, that has changed fundamentally. So this is a mobile first era for financial services, and means that whatever you build needs to comply with the laws and regulations, but at the same time, it needs to deliver an absolutely amazing UX for the client, because otherwise you will lose out to the competition. And then the third point is what we saw when we evaluated solutions back in 2015 and 2016, is a lot of them were creating what I consider a digital facade. So it was a digital process for you as a client, but then in the back office of a bank, there were still thousands of people reviewing that information.
That's true.
And that doesn't work.
No.
Yeah, I mean, Yeah, it is funny, but it's also it's also so completely inefficient. So what we said is, if you look at sort of those three elements, if you really want to fundamentally change that, rather than implementing 5 or 6 different point solutions, what would happen if you actually would build a platform from scratch that covers all of the functionality that different point solutions offer? Which means you need to have functionality around biometric authentication, both liveness detection and facial matching. You need to have checks around document authentication, making sure that you actually have an authentic document in front of you and you can tie it to the individual opening the account. You need to perform checks on the device that a person is using. You need to screen sanction lists. You need to check the location, the whereabouts of the client. You need to have risk scoring in place. You need to have reporting in place. Mm-hmm. And in the end, we concluded, listen, the only way to really drive efficiency in this sector is to have, one, a single data set that you use throughout each of the steps in this process, and two, to do so with proprietary technology. And the reason that proprietary technology is so important is within GDPR and within the strict requirements of regulators, you actually need to be able to explain what you've been doing. And that is true for a physical file, where I explained earlier on why it's so important to have evidence in an audit trail. But the same is true if you apply AI in this space. A regulator actually wants to understand how you've built your model, how you've trained your model, how you eliminate bias, what you do if the model isn't sure. And I think the only way to really confidently do that is if you control the models that you offer to your clients.
Yeah, to provide explicability of your models.
Absolutely. And also, again, to your other point, making sure that you meet the regulatory requirements, which are changing on a continuous basis. But to make matters more complex, as you mentioned, we're currently facing in Europe the 5th AML directive. Within Europe, there's 2 types of laws, directives and regulations. Regulations apply uniform across all member states. Best known example is GDPR. GDPR is the same in Luxembourg as it is in Amsterdam, whereas a directive needs to be transposed into national law, and their member states can choose to gold-plate it. So if you look at the European market, there is differences per member state what the requirements are to onboard a client under the 5th AML directive.
Yeah.
So ultimately what we need to build is a platform that could handle that complexity and be compliant in each of the member states of the EU.
Yeah, so you cover the entire life cycle from the onboarding till the end.
Yes, so it's both from a geographic perspective, we cover all requirements, and then after the initial onboarding, making sure that clients continue to fall within the risk appetite of a financial institution, continue to comply with the regulatory requirements, and at all times have an up-to-date audit file. And this also applies to remediation. The previous topic, we've helped a lot of financial institutions mitigate that process that we just described and actually view it as an opportunity where you can actually make a fundamental change in the way you handle client data. And in some ways that had very, very tangible outcomes. So there was one financial institution that was facing a deadline and a fine, and we actually were able to deliver the remediation process within the deadline, but also we're able to help them get the fine off of the table. So it's really tangible impact that you can deliver to financial institutions.
You only mentioned financial institutions. You also have other actors, of course, that are concerned by this KYC life cycle in general, such as marketplaces. Why did you decide to focus specifically on banks, neobanks, and companies in the financial sector?
I think as a company, it's always important to make sure you're brutally honest about where you deliver the most added value. We've evaluated that both from a geographic perspective and from a vertical perspective. So from a geographic perspective, to my earlier point, we believe Europe is the hardest market to crack because it's where the strictest requirements around anti-money laundering and the strictest requirements around privacy converge. So it's actually a really, really tough market to crack. But if you're able to crack it, then that sets you up for success in other continents as well. And if you look at it from a vertical perspective, I think KYC is a term that's being used very widely, and people actually mean very different things with it. So I always give the example of Airbnb. If Airbnb is asking you to upload your driving license to get the green verified user check mark. What they're actually trying to achieve is to enhance trust in the platform so that I'm more likely to rent your apartment if you have the green user check mark. Does Airbnb really care if someone occasionally slips through with a fake ID? To be honest, not really. So what they need is a decent check that scares away some of the fraudsters, but it's not that important to have thorough checks. Or in another way, they need a sign that says beware of the dog. They don't need an actual guard dog. And I think if you compare that to the financial sector, there's actually very little room for error. Because if you allow a criminal or if you allow a sanctioned individual access to the financial system, it means you have failed as gatekeeper. So it means financial institutions need to perform a lot of really granular checks. They need to make sure the quality meets their regulatory requirements. And that means that if they select a party to support them in that, first and foremost, it's about, can you deliver the quality and the compliance that I need? And that means we can really compete on those two elements. Whereas in the Airbnb example, there are many providers who can give you the beware of the dog sign. There are very few providers who can actually deliver the dog.
I love the comparison. Okay, Krik, you mentioned several times complexities when it comes to opening new countries. So you are present in different countries in Europe, in France, Italy, Spain, etc. Can you stop a few minutes and explain to us what do you take in consideration when you make a new country available? And concretely, what are the changes that you need to perform in your operations and tools?
So I think the most important point is you need to have a very in-depth understanding of the regulatory requirements in a specific country. And in high school, in fourth grade, I dropped German. I was completely fine with that. I moved on, never looked back. But I actually personally read the Geldwäschegesetz in German, which is the German implementation of the fifth AML directive. And that's the approach we as a company and the entire team take when we evaluate a new market. It's first and foremost making sure you really understand the regulatory requirements. And I think in general, if you ask 100 companies what they think of regulation, 99 will say it restricts business. We're the other one. We actually believe it creates business because for us, a law in a specific country provides clarity. It provides a roadmap to how you can be compliant in that market. So you need to really understand what that roadmap looks like. And then you can make sure you have the tech functionality to map to those requirements. And I think if you dive into that a little bit deeper, it's not as if each member state has a complete different approach. There is a layer that is consistent across all member states. But then on top of that, there are countries that have implemented additional requirements that we need to make sure we can offer. Mm-hmm. So if you look at Italy, there's 7 additional data points that need to be taken into account when determining the risk rating. In Spain, there's additional requirements around liveness. In France, there is the requirement to have a qualified electronic signature. And I think understanding that framework from one side, and then from a tech perspective, being able to offer a single API that allows financial institutions to be compliant in each jurisdiction, that's the way we've approached the topic.
Impressive. You mentioned qualified signature. So I think it was my 7th episode, number 7, with Lux Trust, which is offering a qualified signature. So it's a QTSP. Are you a QTSP or do you use services from a qualified trust service provider? Because you propose video ident or bank ident. So I believe checking the bank accounts. So how do you organize this service?
Yeah, so we don't offer video ident. We believe that is not a solution that's client friendly and it also doesn't deliver the conversion you're looking for. But thankfully, we can offer a qualified electronic signature. In a setup where we act as the registration authority and use other parties as the certificate authority. I think if you take a step back and look at what's happening in the European market, I think there's a big push to move to a more, let's say, consistent approach across different member states. The hope is that maybe after the sixth AML directive, we will move to an AML regulation at some point in time, so making sure that we actually have a uniform approach. And I expect that the European Union will take a close look at another regulation that's already in place, EIDAS, and their qualified electronic signature provides an interesting foundation. So I think if you ask what the strategic importance is of qualified electronic signatures for Fourthline, for us it's one of the elements that we need to have in place in order to be compliant in each of the member states, and we therefore offer it specifically in jurisdictions like France, like Germany, where the regulators have endorsed it as one of the compliant measures of onboarding clients.
Great. Thank you for the clarification on this. I thought you were offering video ident. Sorry for that. So a few clients I would like to better understand. It's maybe Conto, or you want to take another example, but this one is interesting because it's a fresh news. Can you present a few use cases and maybe using a Conto example or any other?
Yes, I think what we've seen happening is there's different types of financial institutions that use us for different parts of their strategy. So I think on the one hand, we work with more traditional financial institutions where oftentimes there is a reason they want to change the way they perform KYC. So it can either be a remediation process, which we discussed before. So then it's really the regulator coming in saying the status quo isn't good enough, and where there's a lot of people complain about the speed of execution of a more traditional financial institution. The dinosaur can run when there's a deadline. So I think on the one hand, we see that with traditional financial institutions. It's a very interesting moment for us to partner. And I think the same is true for traditional financial institutions that want to optimize their cost base. And if they look at the current cost base of all the manual checks that we discussed before, then they see the upside of both increasing the quality and reducing the cost by embracing our technology. And the second category of clients that we serve are fast-scaling fintechs, where we've been fortunate enough to partner with a lot of the large fintechs in Europe, and that includes N26, Trade Republic, Conto, Swan, ScalaPay, so really all across Europe. And I think the reason they come to us is, on the one hand, because we're a tech company, so it means we have a very tech-centric approach to solving this problem, and they love that because they are very much aligned with that. But I think on the other hand, to my earlier point, we've taken this specific view that we view the EU as our home market, and therefore we want to make sure that we're compliant in each and every jurisdiction, both for the initial onboarding and for continuous KYC. And that means that as fintechs scale across different jurisdictions, they're going to run into a lot of challenges. And the benefit of partnering with Fourthline is that we've seen these challenges before. So we can actually tell them what it takes to be regulated in a country, not just based on the laws and regulations in the country, but also based on specific discussions we've had with regulators in those countries, because we spend a lot of time and invest a lot of time in discussions with regulators to also explain to them what we're doing with our technology. And I think that's really powerful if you're building international partnerships.
You didn't fully answer my question, Krik, so I insist on Conto. Can you say a few more words about this partnership?
Yes, I think what is interesting in France, that's a clear example of where we've seen how changing regulations impact the way financial institutions operate. And what we've seen in France is that new regulation came into play, offering financial institutions different ways to comply with anti-money laundering regulations. And a lot of focus was given initially on the so-called ANSI framework. But as is often true in different jurisdictions, a regulator will offer different ways to comply with the law. And the same is true in France. So the ACPR has provided a list of different ways you can meet the requirements. And when we evaluated those requirements as a company, we took a view on what we believed is ultimately the best way to deliver both high quality towards the regulator and great UX towards clients. And in the end, For us, that meant that we decided to build a solution for France, including a qualified electronic signature. And I think what we've seen happening is that French financial institutions realized that they needed to change because of the changing regulations, then evaluated what the best solutions were out there in the market. And that's ultimately why Conto decided to partner with us. So it was really the regulatory change, and then within that regulatory change, looking for the best way to meet the regulatory obligations.
Thank you. One last question about Fourthline before we close the discussion is you raised funds from VCs. Currently, how does cap table look like?
So we raised in total 70 million, 70. Latest round that we announced was a 50 million round. And it means that we have institutional VCs on our cap table who are really sort of committed to helping us build this company out further, where sort of we believe there's still a world to win. So even though we're very happy with the progress that we made in recent years and very happy with all the clients that we've been able to get on board, there's still a lot of work to be done. And we believe there's a lot of potential for us to grow in both areas, so both in the fintechs, but also, to my earlier point, in the more traditional financial institutions. I think one of the advantages we have is that we know really where product market fit is. We know it's a very large market. It's a market that's still growing. And I think we've built a truly differentiating solution to tackle the challenges in that sector. And I think that's very promising for the growth in the future.
So you said you cracked the market in Europe. So what are your next steps? Asia, the US?
No, I think let's be very clear. I think what we did is we cracked it from a tech and regulatory perspective. So we invested a lot of time and effort in getting the platform to a level where it delivers the quality, the compliance, and the efficiency that the market is looking for. And I love how now in 2023, everyone is talking about AI, but we've been investing really heavily in AI for over 6 years. And back then, no one was asking questions around AI. And trust me, it's really, really hard to do this at scale. So it took us 3 years to get the models to a level where we really believed it was scalable at the quality and compliance levels that we're looking for. So we cracked the market in the sense that we have this incredible technology that delivers both the compliance and the quality. That doesn't mean that the market is saturated and we cannot grow in Europe anymore. Quite the contrary. I think there's a lot of room for us to grow. And the other point is getting back to the global landscape. I think Europe is ahead in both anti-money laundering and privacy regulations. And I think the world is paying attention. And I think in the end, the regulatory environment, both within Europe and in other markets, is only going to go one way, which is when it comes to money laundering, it's going to be about stricter regulations. And I think the US market is going to be very, very interesting for the point I was making earlier, where we've seen states adopt privacy legislation, and we've seen a lot of our US competitors get into trouble with that. So there have been multiple class actions where competitors had to settle for several millions of dollars in lawsuits because they could not reverse engineer their platform to comply with these privacy regulations. And I think that's an advantage if you've built a platform from day one with sort of this privacy in the core DNA of the company, that makes it easier to scale from there than reverse engineer a platform later on.
Great. So Krik, that's the end of our discussion. I always ask a book recommendation or a podcast. So what do you recommend to us today?
So I think in terms of a book recommendation, I always get a lot of advice around reading management books or books about startups that are phenomenally successful. I think it's always a little hard to replicate someone else's success. So even though I read a lot of these books, I don't find them particularly useful. What I did find interesting is the book $1 Billion Loser around WeWork, because I think it's actually much more interesting to learn about other people's mistakes, because it's easier to avoid replicating mistakes than it is to replicate successes. And I think especially if you look at the recent developments around WeWork, which is a stunning downfall from 46 billion valuation at the top of the market to last week, I think it was below 200 million, and who knows where it's going to end. Mm-hmm. I think there's a lot of lessons in that book that I apply on a daily basis, and that hopefully your audience will benefit from as well if they read it.
Great. Thank you very much, Krik. That was very interesting and very different from the other episode that I did on the subject. So thank you for diving into these remediation processes in particular. And good luck for the future.
Thanks so much for having me.
Bye. Thank you all for listening and sharing this moment with us. Don't hesitate to contact me on Twitter or LinkedIn to share your comments and reactions. You can also rate this episode on your favorite podcast platform. See you soon.